Hey everyone, Charting Man Dan from ChartGuys.com. You know, behind every single video that we put out every single day, there's a wonderful community of traders that we want to invite you to be a part of. Try the free 7-day trial and gain access to our live market broadcasts every morning and afternoon, interact with hundreds of like-minded traders, or take part in one of our dedicated chat rooms, each led by an analyst that's there to answer your questions in real time. Our trial is risk-free with absolutely no commitment or credit card required to experience the TCG community. For those looking for a head start in technical analysis, check out our entries and exits course in the link below in the description. Get up to speed with the fundamentals of TCG technical analysis and experience over 5 hours of great community-driven trading education. Hey everyone, checking in on SPY IWM QQQ to start off Monday, May 1st. So SPY bulls showed up here today. They had a pretty good day, especially after the close down near the low of the day on Friday. This is still a potential bull flag pattern. The bulls need to break to higher highs to see continuation. So we're looking at short-term support, the low of this couple-day pullback, 237.93. And in terms of resistance, we're looking at the high of today, 239.17, and then 239.53, the high that we've seen on this move. So the bulls are definitely still in control, but it was a bit of an interesting day where we had some blue sky breakout bulls in a lot of strength. A lot of them were up 2 to 3%, and SPY was only up, about 0.4, 0.5%. And there was a point in today when the technology sector, the financial sector, and the biotech sector were all up 0.8%, and SPY was only up 0.4%, and that's unusual in 2017. Been watching the correlation between the technology and the financial sector and the S&P 500 extremely close, and that's not usual. So it was the energy sector was a big drag, and we were also seeing the utility sector down, as utilities is a defensive sector. So if the SPY bulls are strong, utilities not really seeing much influx. So there were some other sectors holding down the S&P 500, but those names that are subject to tech sector strength were having a really good day. So overall, SPY bulls in control. We have a bit of indecision today. We'll have to see which direction we head tomorrow. Weekly time frame certainly still favoring the bulls and looking strong and looking for higher highs. And again, the adjusted for dividend SPY level has seen a new all-time high now. Now we just need SPX to break 2401 for the S&P 500 to get an all-time high as well. IWM, bulls buying the dip, bullish reversal candlestick after a 2-day pullback. Saw a little bit further downside after the very weak close on Friday, and the bulls did show up and buy that dip. We're looking at resistance of 140.29, trying to head back towards the upside. We need another green day to confirm this reversal candlestick. Otherwise, we do have to keep an eye on the gap down here at 137.55. So a couple key levels to be watching. Need a green day tomorrow to follow through with the bulls buying this dip, and the weekly time frame after rejecting from the upper Bollinger Band and forming a bearish reversal doji last week. We're rejecting from that upper Bollinger Band again this week, and that's up at 140.04. So keeping an eye on the bulls' ability to close above that level, and if we cannot, we will look to stay around this range or consolidate a little bit further. So pretty much from where we currently stand, it's going to require a breakout on the daily time frame above the upper Bollinger Band to see further continuation from here. QQQ on the daily time frame, look at that bull, 6 new all-time highs in a row. Tech sector, the lead driving force, increasing bull volume, and it is just a runaway bull. We do have 2 gap up opens in a row. If we see another gap up open tomorrow, we do need to be cautious of a bearish reversal 3 gap up pattern, which would indicate the bulls have exhausted themselves to the upside. But this is an extremely strong chart running above the upper Bollinger Band. We weren't even up above the Bollinger Band on this February incredible bull run, and here we are doing it again. Extremely strong. This weekly chart is a raging bull as well. There is nothing that you can say bearish about the technology sector. We've got Facebook and Apple earnings coming Tuesday and Wednesday, so we need to be watching to see if the bulls get a bullish reaction in those names. It's only going to continue. So the risk to reward does favor risk at these levels, and we do need to be cautious of that. Certainly wouldn't want to be making a bullish entry. I personally would not want to be making bullish entries any more than day trade scalps now that we are so significantly breaking out above the upper Bollinger Band, but we'll be watching for normal healthy consolidation. If we lose the upper Bollinger Band, that will be the indication, and we'll look to form a higher low and see if we can get continuation. So I appreciate you watching, and we'll see you tomorrow.